So basically, we are learning about pupa. What is pupa?
Um, Provision for unrealized profit.
Provision for unrealized profit account. And can you tell me how is it created?
I don't know.
Okay, you don't know what is pupa. So basically, pupa is created because the goods are transferred from the factory to the trading or to the warehouse at a price which is called the transfer price. Are you with me?
Yeah.
Okay, what is transfer price?
Transfer price is the price that you calculate in the manufacturing account.
How do you calculate it?
It is the manufacturing cost plus the profit, factory profit, which
Okay.
gives you the
And
transfer
how
price.
do you get the factory profit?
You get the factory profit after you compare it to the market price.
Okay. So say for example, you have produced the goods in the factory for 100,000.
Hmm.
Okay. This is the PCCG, or I would say this is the production cost for completed goods.
Hmm.
Okay. Production cost of completed goods.
Yeah.
In that, you get the same goods from outside. If you go to buy the same goods outside, you get it at 200,000.
Hmm.
200,000, or maybe you say you get it at 150,000. Not 200,000, you get it for 150,000.
Hmm.
The same goods you buy from outside, you get it at 150,000. So this is called the transfer price to income statement.
Hmm.
You will transfer the goods for buying and selling to the income statement at this price. Are you with me?
Yeah.
That means because you have produced your goods, you have made a profit of 50,000.
Yeah.
This 50,000 is called the factory profit, or I would say this is called the manufacturing profit.
Yeah.
Are you with me?
Hmm.
So when I say production cost of completed goods is 100,000, 50,000 is the factory profit. So transfer price to the income statement would be 150,000.
Yeah.
That means whatever goods you are transferring to your income statement, that is this 1,50,000. Whatever goods you are transferring to the income statement, it is at transfer price.
Yeah.
And if I say it is at transfer price, that means it includes
Factory.
manufacturing profit.
Yeah.
It includes manufacturing profit.
Hmm.
In the opening inventory, also, you might have manufacturing profit.
Yeah.
Are you sure?
Yeah.
Because this has also been transferred from the manufacturing account to your income statement. So, this is also your manufacturing profit. It
Oh.
includes manufacturing profit.
Yeah.
This also includes manufacturing profit.
Hmm.
Can I just reverse this situation? I will make the factory profit 100,000. Okay.
Okay.
So this becomes 200,000.
Hmm.
That means I would say the factory profit is 100% of cost.
Yeah.
Factory profit is what?
100% of cost.
Factory profit is 100% of the cost. Are you with me?
Hmm.
Okay, fine. Now understand one thing. Your opening inventory of the finished goods would also be at transfer price.
Yeah.
Yes.
Yeah.
The production cost of completed good is also at transfer price.
Yeah.
When I say it is a transfer price, that means it has an element of the factory profit included in it.
Hmm.
इसमें how much factory profit might be there?
Hmm. With
100% on cost is the factory profit.
yeah, so it'll be 100% on sales also.
So 10,000 is the factory profit included at this price.
Yeah.
100,000 is the factory profit included at this price.
Hmm. And
And you also have closing inventory of finished goods. So 15,000 is the factory profit that is included in this price.
yeah.
Are you with me?
Hmm.
From all these three, tell me what is the profit that you have not earned?
Profit. Closing inventory.
Closing inventory. That
Hmm.
means in your closing inventory of 30,000,
Hmm.
there is an element of what? There is an element of
Profit.
factory profit
Yeah.
which is not earned.
Hmm.
So in your closing inventory of 30,000, there is an element of factory profit not earned.
Hmm.
So is it good to take this profit?
No.
No. So that means when you are doing your income statement, revenue minus cost of sales, you get gross profit on trading. In this gross profit on trading, you also add the gross profit on manufacturing so that you get your total gross profit of 510,000. Yes,
Yeah.
this is your total gross profit. But tell me, in
Hmm.
this total gross profit, there is some place where the factory profit is included and it is not earned.
Closing inventory.
Closing inventory of finished goods has the factory profit included and it is not yet earned. That is the unrealized profit. What is it?
Unrealized profit.
So this unrealized profit you have to remove from your total gross profit so that you can take benefit only of the profit that you have earned.
Yeah.
Okay, so the unrealized profit you have to remove it. To remove the unrealized profit, you will do opening pupa minus the closing pupa.
Hmm.
That means unrealized profit included in the opening inventory minus unrealized profit included in the closing inventory. Can you
Hmm.
shift to my screen, please?
I have shifted to your screen only.
Okay, so you will remove the pupa opening inventory on unrealized profit on the opening inventory
Hmm.
minus unrealized profit on the closing inventory. Are you
Yeah.
with me? Now, unrealized profit included in the closing inventory of finished goods is how much? 100% on cost.
Yeah.
That means one part on cost,
Hmm.
one by one on cost.
Miss, can you go a little upper? I can't see everything. Yeah.
Okay. So you
Hmm.
will have to remove the unrealized profit. So this treatment you will do like the provision for doubtful debts and you will remove this pupa. Are you
Oh,
with me?
yeah.
So from the opening minus
Okay.
closing, whatever is the difference that you will remove. Now this example has wrong things, so I don't want to go in this
Hmm.
example. Are
Okay.
you with me?
Yeah.
Another thing that you will do is whatever is your inventory of finished goods, which you show in your current assets.
Hmm.
From that also you will remove your pupa.
Okay.
What is that? Whatever amount of the element of the profit is there in the inventory. Are you with me?
Yeah.
Let's do it with one sum so that our concept becomes clear.
Hmm.
Come on. Can you please read the sum for me?
Yeah. Eugene is a manufacturer who started trading on 1st May 2017 and has 30 April as his year end. The transfer pricing markup has always been 30%. His inventory figures, including the factory profit, were, and then the figures are given. The,
Okay, fine.
hmm. The closing inventory at the end of one year is the opening inventory for the next. But we need to calculate the unrealized holding profit relating to the inventory value at the end of each year.
Okay, fine. No problem.
Hmm.
Come on. There is no inventory at 2018.
Hmm.
There is closing inventory on 156.
Yeah.
Transfer price markup has always been 30%.
Hmm.
So markup
30%.
markup is on,
Cost.
margin is on,
Sales.
markup is on,
Cost.
margin is on.
Sales.
Hmm?
Sales.
Okay, fine. So markup is on cost, margin is on
Sales.
sales. Okay, fine. PCCG is cost of sales.
Hmm.
PCCG is cost of sales.
Yeah. Oh, PCCG is cost.
Then you will add your transfer price.
Yeah. And then you'll get
Then you will add what transfer price or factory profit.
you'll add factory profit and then you'll get transfer price.
You will get transfer price. Now,
Hmm.
when you're talking about markup, it is how much
30%
on?
cost.
Okay, that means it is 30 by 100
Yeah.
on cost. Tell
Hmm.
me, your closing inventory will be at the transfer price or it will be at the cost price?
It'll be at the transfer price.
Okay, closing inventory will be at the transfer price. So if
Hmm.
it is 30 by 100 on costs,
And there'll be 30 upon 130 on sales.
so it will be 30 by 130 on sales. Are you with me?
Yeah.
So this is the profit included in the closing inventory.
Okay.
Now this is unrealized profit.
Okay.
Yeah.
Yeah.
How much profit in the closing inventory?
30 by 130.
30 by 130
130
of how much?
into 156.
Hmm?
Into 156.
Hmm.
36.
Into 156 is how much?
36.
36. Okay. Are you
Hmm.
with me? What
Yeah.
would be the journal entry for this?
Um, Closing inventory is reducing. So it'll be closing inventory credit and unrealized profit debit.
Sorry,
Closing inventory credit and unrealized profit debit.
darling Nidhi, I'm talking for the entry of pupa, provision for
Oh,
unrealized profit account.
oh, okay.
What will be the journal entry? What is the journal entry that you pass for provision for doubtful debts?
We do prove it if like it's increasing, then
Hmm.
it's credited, and if it's decreasing, then it's debited.
So you will say statement of profit or loss debit
Yeah.
and
The account provision for unrealized profit.
statement of profit or loss debit
Yeah.
and what?
Mm, will it be profit?
Provision for unrealized profit, that is pupa,
Okay.
will be credited.
Okay. So
36, 36. Statement of profit or loss debit and pupa credited. Are you with me?
yeah.
Okay, fine. Now this is your old pupa. The closing inventory of 2018 becomes the opening inventory of
2019.
2019. Very good. Now let's calculate the unrealized profit included in the closing inventory of 2019.
Yeah. So it'll be 208
See,
into
130.
130 into 208.
So this will become how much?
Um,
48.
48.
This is your new pupa on the closing inventory.
Yeah.
But initially already 36 was there.
Yeah. So it increased by
Okay. So I will do old minus new. Old unrealized profit was 36. New unrealized profit is 48. Yeah.
yeah.
Old minus new is negative.
It's 12. Yeah.
See, if old minus new is negative, that means what?
That means that
It is
your
a loss for you.
yeah.
You still have to create more.
Hmm.
Okay. So if old minus new is negative, that means it is a loss for you. What is the journal entry you will pass? How much is the loss? Minus 12.
12. Yeah.
What is the journal entry you will pass?
Same only na statement of pro-
Statement of profit or loss.
debit 12
Hmm.
and provision for
Pupa
unrealized profit. Yeah.
credit 12. State provision for unrealized profit credit 12.
Yeah. So when it becomes positive, you'll switch the entry, right?
Yeah.
Okay.
So come on. Now what is the pupa included in the closing inventory?
195 into 30 upon
Here it was
130.
48. Okay.
Yeah. So now it's 45.
So it will be 30 over.
130 into 195.
So this will become how much? 45.
Hmm.
So now old minus new. Old was 48. New is 45.
But isn't old 12 now?
No, that was old minus new, the difference.
Okay.
Because in the profit or loss, you will only take the benefit of the difference, right?
Yeah.
So old minus new is positive.
Yeah.
Old minus new is positive 3.
So it'll be pupa
Okay.
debit 3,
So it will be
pupa
pupa debit.
3 and statement of profit and loss credit 3.
Okay.
Hmm.
3. So this is how you create your pupa. You find the new pupa that is included in the closing inventory.
Hmm.
But in the income statement, you will adjust only the difference, the old minus new. If
Okay.
old minus new is positive, then you
That,
decrease your pupa because old was more.
so that's an income, right?
Because initially your unrealized profit was more.
Hmm.
Now it is less.
Hmm.
So you reduce the benefit.
Hmm.
And if old minus new is negative, then you have to keep more profits aside for
Yeah.
unrealized profits. Are you with me? I'm
Yeah.
giving you time, just complete this up. Now you have to create a pupa account.
Hmm.
Okay? Come on. First pupa.
The first pupa is 36.
Entry, give me the entry, darling.
For entry statement of profit and loss debit and provision for unrealized profit credit.
Profit or loss debit,
Hmm. So on the credit side, you'll,
pupa is credit.
yeah. So 36 on the credit side.
And I'll write statement of profit or loss. It's just like provision for doubtful debts. On the last date, that is 2018, April 30. Yes?
Yeah. So in A levels, compulsory date.
Yeah.
Okay.
Then 36, you write it.
Yeah. And then
You will close it. Balance close down. Same thing. April 30, 2018. Are you with me?
yeah.
Now you will ring this balance begin down. 36.
Yeah. On the first.
Okay.
Yeah.
So old balance on the credit side.
Hmm.
New pupa.
Yeah.
What is the new pupa?
It's 12.
So this will be what date? 1
2000.
May 2018.
Yeah. And the
A
next
new
one.
pupa, new pupa. Closing balance will be on the opposite side, right?
Yeah.
So balance closed down. How much is the new pupa?
12.
Darling, that is old minus new.
Sorry, so it's
What is wrong
48.
with you?
Yeah, it's 48.
Opening pupa will be on the opening inventory.
Yeah.
Closing pupa will be on the closing inventory.
Yeah. Yeah. 48.
What date?
It'll be 2019, April 30th.
Then old minus new.
Okay. So,
Old minus new is positive. So pupa debit, profit or loss debit, pupa credit. You can also get this as balancing figure.
hmm.
Okay.
Yeah.
What will you write? Statement of profit or loss.
Yeah. 12.
What date?
Last date 2019, April 30th.
Very good. Then what will you do?
Then you'll put the balance CD on the credit side, 48, and then
This would be
balance begin down
this would be factory profit included in which inventory?
in opening inventory.
Included in opening inventory.
Hmm.
How much?
In this one, you'll write the balance CD on the other side.
48. Now balance closed down.
Yeah.
Factory profit included in the closing inventory.
Yeah.
How much?
45.
45. Very good. Now old minus you can also get this as a balancing figure.
Yeah.
Okay.
Hmm.
Okay.
Yeah.
So now if I close this, it will be 48, 48, and 3.
Hmm.
And I will write statement of profit or loss.
2020 April 30th.
Hmm. Are you with me?
Yeah.
Done.
Hmm.
Let's go ahead. So this is your pupa.
Hmm.
You have to make a statement of financial position. So statement of financial position for 30th April 2018.
Yeah.
Your closing inventory of finished goods would be 156.
Yeah.
From that, you will remove your pupa included in the closing inventory.
Okay.
And then you come at 120.
Hmm.
Now 2019. Closing inventory is how much?
208.
208. From that, you will remove your closing pupa.
Yeah.
That is the pupa included in the closing inventory. Then you arrive at this figure.
Okay.
In 2020, what is your inventory of finished goods?
195.
What is your pupa included?
45.
So you will remove 45 and you will come at what? 150. So this is your extract statement of financial position.
Hmm.
Now similarly, you have to do question number 12 where you have to find your pupa and journal entry. You
Hmm.
have to make your pupa account.
Yeah.
Are you with me?
Yeah.
And after that, you have to show extract of statement of financial position. I'm sure you will be able to do it.
Hmm.
So once this is done, we'll move ahead. Okay.
Okay.